Hello traders, in this video I am going to talk about the ICT fair value gap or imbalance, right? As you can see on my screen. Okay, so basically there are 7 reference points on ICT, okay, which is we have fair value gap, we have mitigation block, we have breaker block, we have order block, we have liquidity void, we have rejection block, and we have old lows and old high. These are 7 institutional reference points according to ICT, right? So I'm going to explain all these things and put it in a playlist for you guys. I'm going to make 7 different videos about these reference points, okay, and how you can use them to trade. All right, but before then guys, this is my channel, and what I'm doing in this channel is that I dedicate it to teach you guys all the ICT concepts on how you can use them to trade. So if you're a beginner on ICT, I would advise you to subscribe on this channel, right? Because have a lot of video coming up for you guys, okay, and you can still go to ICT official YouTube channel to watch, but here is to simplify it in a way that a beginner will understand it and use the concept to trade. I've already done 2 videos here on the channel, right? So if you are seeing this right now, I would like you to like this particular video and also subscribe to the channel, because I have more of these beginners video to come. So in the beginning we talked about the ICT market delivery. Secondly, we talked about the ICT market structure. So today we are going into the institutional reference points, like I said, and we will start with the fair value gap. All right, as you can see on the screen, we'll start with the fair value gap. Now, what is fair value gap? So this is how I explain it. You guys know that market delivers in fractals, okay? So whenever market is delivering, right, ordinarily it needs to be balanced. The candles need to be balanced, all right? But in a case that there an imbalance in the price action that is between 3 candles, this happen between 3 candles. So let me write it. So whenever I want to identify fair value gap, it must happen between 3 candles, right? It must happen between 3 candles, okay? So you know what you are doing, right? It must happen between 3 candles. Now this is to let you understand what you are doing. All right, so now as you can see, this is my drawing on the chart. All right, let's choose this particular red one for example now. Okay, now you can see that the market is coming from up to the bottom. It's coming from up right here down this way. Now you can see what is happening now. Okay, so you can see in this particular price action that it is balanced. This is because all the candles, now we are not paying attention to the wicks. Take note, it's not the wicks, it's not the body we are talking about right now. We are talking about the wicks. The wicks is this particular lines you are seeing. This is what I call wicks. So the wicks are those lines, right? These lines now you are seeing here, these lines, this is what I call wicks, the one I'm actually shaking. Okay, so the wicks is determining if the market is balanced or not. So if you want to identify fair value gap, you should pay attention to the wicks of the candle. All right, now let's see it in this perspective, and the one I drew in the left side. Now when we look at this price action from this bottom right here to the up, okay, it is not balanced. Right? These 3 candles are not balanced. So let's look at the wicks of the candle. The wicks of the candle is not balanced. There is a gap between here and here. All right, so that is when you see fair value gap. Okay, so this happen mainly on the chart. All right, this happen mainly on the chart. And the next thing you need to understand is that this fair value gap doesn't really matter. Okay, the candle color doesn't matter. Let me also make you guys understand it. Okay, so candle color, right, color doesn't what matter. It doesn't really matter. Doesn't matter, right? So you understand what you are doing so that you know not go and start making mistake, or you say that okay, because it is red candle or it is black candle or green candle, that is not a fair value gap. No, it doesn't really matter in this scenario. Even if it is red, green, whatever, but once it is a three candle price action and they did not balance, okay, the gap between there is what we call fair value gap, FVG, or imbalance. All right, so I'm going to go to the chart, okay, to explain more and show you guys the practical examples of this thing happening on the chart. All right, every single day it happens. Now, like I said, if you bring your trend line, and now you can see that somehow this line, this particular place, there is a balance range. Okay, that there is a balance range between these two weeks that makes this particular price action balanced. But in this case, there is a gap between these week, the one the low of this and the high of this. There is a gap between them. Okay, that is what we call imbalance. All right, so if I take these weeks down now, right, somewhere like this, and take this one up a bit this way, I have create an imbalance right here. Did you see what I showed you guys now? So it happens in any market. It happens in any delivery. What really matters in this is that you need to be sure that they are balanced. Okay, and for them to balance, that is how you use them to trade. And I'm going to show you how to do that in this video. So guys, if you are getting value, I think this is the best time for you to like this video. All right, and also comment down below. So let's go to the chart and let's start looking out for this. Let's look out for these imbalances or fair value gap and how you can trade them and use them for your entry, for your support, or for resistance, or whatsoever you want to use it for. Okay, but mainly in ICT we use it for entry, okay, as our entry point. So let's come to the charts. Okay, now coming to the chart already, I can see many of them. All right, but I'm going to show you guys all of them in different food when the market is, as the market is delivery right now and everything. I can show you everything. Okay, so now if you check this price action here, now we can see one that's already happening. You can see one here. This is daily time frame. Okay, so let's go down to, it is all time frame really. You can find it in any time frame, but the thing is that it depends on the time frame you are using, okay, to mark these things out. If you are using daily time frame, you may not see the same thing in 4 hour. If you are using 4 hour, you may not see it the same place. It might be different, but they are all working. Like I said, markets move in fractals. So this is the daily time frame. Now let's look out for these fair value gaps. Okay, now see one here. All right, see one of them here. So you can see how market respected it here. So let me draw it. You can see here now, this is the height of this candle. All right, okay, and the low of the third one. Look at the third one, the low of this third candle right here. So what is this? This is a fair value gap. Did you see it now? So market will eventually come back to fill it up. You see that market came back there to fill it up. All right, now let's keep looking for another one. Okay, let's look at another fair value gap here. This price action here, you can see this, the height of this candle, all right, and the low of this one. You can see, well, I told you guys that the color of the candle doesn't really matter. Look at this one. This is a bearish candle, but it doesn't really matter. Okay, once there is a gap, market come back to fill it up. Okay, and in this case it is used for an entry. You see, as markets come down to this place, it reacts at this fair value gap and start going up. bullish. Do you see? So market always print this thing on the chart. It's always print it on the chart. So it's left for you to start looking out for it, both in the bearish form and also in the bullish market. You always see fair value gap. So look at it here in this bearish move right here. Look at fair value gap here, the low of this candle and the height of this third candle. All right, and you see what happened. Market was going down. Okay, it came back first time to tap on it and keep pushing down and eventually fill it up in this case. All right, so market always come back to it to fill them up. All right, it is like in any time frame, like I said, it lets me come down to the 4 hour. So you see that this thing happens in any time frame. It doesn't really matter the time frame you are using or anything, it's always happen. Okay, so look at it right here now. So this is 4 hour time frame now. So let me start looking for more of it. Okay, so you can see that whatever time frame you are using, you can use this fair value gap for either your entry or anything. So look at it right now. You can see this, the height of this bullish candle here, right, the low of it, sorry, and the height of this one. All right, that is a fair value gap here. Okay, what market did, market later come up, right, and fill the gap. All right, later come up and fill the gap. So most of the time this gap must be filled. It's not a rocket science, it must be filled. You see it later come back to that point to fill the gap. You see, so that is how you use it for both your trading. You can see how it is, happening in every time. If you go down to 1 hour, you will see it. If you go down to 30 minutes, you will see this thing I'm showing you. Even to in the 1 hour, anywhere you go, you will see all this fair value gap that I'm showing you. So let me check another thing. I want to show you guys how to use it for your entries. Okay, so you really understand how to trade it, because I mainly use this for my entry. Okay, and it is very, very nice. All right, very, very, very nice. So right here now, this is GBP USD, and look at the charts very well. Look at the chart now. So we have a fair value gap here. This is daily time frame. You have to remember this. Okay, you don't enter a trade on daily time frame, but look at this fair value gap here. Look at something here now. Look at it here. Okay, and this one up here, this one here, right? So now if you check, if I mark out this thing and I will go to this smaller time frame, you will see that market respected it very well. Let me mark out this place now. All right, and let's go to 4 hour time frame and see something. Now look at what happened here now in the 4 hour, right? What happened in the 4 hour? So after market created this fair value gap in the daily time frame, here on the 4 hour, you can see how market came to this point, to this particular fair value gap here, right? Tap into it and drop down. So if you measure this now from here now, right, you see that you have actually gotten about how many pips? Almost 100 pips, 115 pips. So it's a very big move. So market uses here now as the resistance zone to the downside. Are you see what I'm showing you guys, right? So this should tell you that this thing really works. It's not that something doesn't work. It works every time in the market. So when market came first of all to tap on it, it stands here now as a resistance zone, as a resistance to push market to the downside, right? So the reason why you are seeing this now, I'm showing you all this is because for you to understand how to use it to trade. How can you use it to trade? All right, so I mainly use it for my entries, and it's mainly on the lower time frame, 15 minutes time frame. That's why I use it for my entry most of time. Okay, both for my buys and my sells, it works perfectly, right? So I'm going to just stop right here. Let me not make this video to be too long. I will basically do video extensively showing you guys different points and where I will use it for my entries, so you guys can now see it clear. All right, but for now, just get the idea, and that will go to your chart to identify these points and also know how to use it for your entries. It can work as a support zone, it can work as a resistance zone. Alright, so guys, that is what we call fair value gap. Okay, this thing now I show you guys, that's how it works. Okay, and I believe you guys really understand it. Okay, and also in my next other videos that will be coming up on this channel, I am going to explain more on that. Okay, and show you guys ways you can use it for your trade entries. Alright, so guys, before I go, if you got value in this particular video, I would like you to share this video, and as well, come to our channel and subscribe, because I'll be dropping every single video about ICT concepts here on the channel to help you succeed in this forex market. Okay, so guys, I'll see you guys on the next video, and until next time guys, peace out.